traders, so welcome back to the Sharks Trading Academy's weekly market analysis. And the very first pair I want to talk about would be AUDCAD. Right off the bat, we have a breakout structure over here, leaving behind what? A supply zone, right? And we want to dive deeper into what is going on here. So you can see that the move already happened, but this does not mean that we cannot catch the continuation moves. Why? Because you understand that this sell move over here left behind liquidity lows here. So this is ultimately our target. And as long as prices doesn't reach this level, we are valid for sells. Okay? So now dropping down to the lower time frame, you can see over here, we have a demand area, right? And why is this demand area so important? Because on the lower time frame, you understand that this is a bullish move. And if prices wants to buy higher, where do you want to buy from? You want to continue this bullish move, right? And you want to buy from here to move higher. But now this area over here got broken, and you are immediately wanting to sell because you know that the buyers has already been mitigated or liquidated, and now you're looking for a pullback. Okay, so look for a pullback into these areas over here. Can you see? This is a very nice 30-minute supply zone for us to actually get involved. And as prices breaks this level, you can see over here, this has been liquidated, right? Liquidity grabs, and over here, as prices makes its way up, it is going to liquidate these areas as well. Trend lines, highs, and whatsoever. Okay? Then tap into your supply zone. Over here, you could have been a seller, right? You can place a sell limit here, stop loss above this high, and aim for first liquidity area over here, assuming that this is the lowest it got to before it actually retraces back. So TP1 is here, TP2 will definitely be the lowest low, right? Otherwise, look to confirm these areas on the lower time frame. So maybe you can go lower, like the 7 minutes or the 5 minutes, okay? And as prices pulls back, what you want to see would be a shift. Okay, maybe Wyckoff, maybe some sort of a retail logic, like a bullish wedge, you know, rising wedge patterns and stuff like that, you know. Wait for the shift in structure over here, then look for sells. So this is how you can actually execute your trade. And over here, the difference is that with this shift in structure, you validate the supply zone here. And that's why your stop loss can be above this level, right? And aim for here. Okay, so do you see the difference? Over here, we wait for the lower time frame to validate our supply zone because this is our price of interest. Lower time frame confirmation telling us that the shift happens here. We are looking for sells and it validates the supply zone. Stop loss above this level. Otherwise, place a sell limit here without knowing whether this supply zone holds, because at this point of time, as prices makes its way up into this supply zone, you do not know whether this supply zone will hold, and that is why you have to wait for, you have to put your stop loss above this supply zone instead, because what you did over here was to validate this big supply zone. Okay, and that is why stop loss above this level, right? Aim for these areas over here. Next up, we will be talking about the Aussie dollar. So straight up, you know that here we have a demand zone on the weekly time frame, right? So drop down to the lower time frame on the daily, okay? And what you want to see would be the accumulation of orders inside of here at the very least, because the only way I can get involved in buys right now to liquidate all of these levels here is if I see a shift in structure. And over here, clearly we do not see any shift in structure, right? I want to see a shift like this that breaks out of this area. Okay, so break of structure over here, leaving behind potential demand zones inside of here. Then get involved when I get the pullback for liquidity highs. Alright, so this is how we actually aim for buys. Otherwise, wait for prices to actually give us a shift over here, which means to say that you understand that we have a range of our demand zone. And this doesn't mean that prices can't start doing this, right? We can see the accumulation of orders happening here. Then the break, targeting here. So the truth is that if you want to be a seller to continue this bearish order flow, right? You can be a seller here to bring prices lower. And that is why, as a buyer, you want to buy into these areas before waiting for a pullback. Because you understand that if prices starts to fall from here and distribute, this may be a continuation move of this bearish move down. right? And what you need to see would be a break of this area, like this, a break of this supply, telling you that the supply failed to hold. Then this validates your demand zone over here. And this is where you can actually look for buys to higher prices. Okay, so the truth is that wait for a break or structure of the supply over here. Wait for the pullback to get involved into higher areas, right? Otherwise, wait for the shift to happen below in this demand zone and buy into this supply zone. Then leave partials running, because if prices breaks this area, then you know that these demand zones here is valid for buys. All right. So over here we have the euro pound, and you understand that on a grand scheme of things, this is where you want to get involved for buys, right? And as long as prices doesn't reach this area, we still have room for sells. So why do we want to be a seller now? Over here, when we have a shift in structure here, we believe that prices wants to move higher from this demand zone, because this is the demand that broke out of structure. And as prices comes back down, give us a secondary shift, right? So some traders may have gotten involved in these areas over here. But as prices breaks down of this demand, this validates the sell structure here. So this is now your supply. And this demand failed to hold. Alright. So now simply we have a break of structure here. And if you want to sell, you want to sell high, right? You want to sell here. So over here now, you can wait for prices to give you a distribution. Okay, maybe you drop down to the lower time frame, like the 4 hours. And as prices makes its way higher, you can see that it liquidates highs here, right? All of these levels will be liquidated. And as prices taps into this level, wait for the shift in structure to bring prices lower, alright? So as prices breaks down here, this shift gives you the range. Okay? Potentially leaving behind supply zones here for you to get involved. And of course, first take profit area will be here, then aim for the next level here, right? Here and here. All of the swing lows are basically your take profit areas. And of course, allowing small positions to run towards our daily demand zone here, right? Because ultimately we are trying to buy here. And why are we trying to buy here? Because this strong move broke out of structure over here. And this means that on the high time frame, this move over here comes back down towards this demand zone, the last demand zone that broke out of structure, giving us the opportunity to buy into these liquidity highs. And this is the trade idea for our euro pound. Over here we have the euro yen, and you can see on the 8-hour time frame where prices broke out of this area, we left behind a demand zone that was left unmitigated all the way until now. Okay, so drop down to the lower time frame, you understand that we have a supply zone here that broke out of structure, and this means that we are still valid for sells inside of this area. However, since that we are in a high time frame demand zone, we want to see if this demand zone actually holds, right? And how do we see that? Once this supply fails to break lower, right? Because you understand that there are sellers being inside of here, trying to continue this bearish movement. But once prices fail to make a lower low and instead makes a higher high, you understand that this demand zone won the battle. This supply failed, and means to say that we are looking for a pullback now into this area to catch buys, right? Into where? Into the next supply area here. Because this supply broke out of structure, right? Leaving behind this area that was left unmitigated. And similarly over here, we are looking for what prices decides to do, okay? You can actually take profit over here. Otherwise, wait to see. If we see a distribution here, this distribution may take us lower. Otherwise, tap into this demand zone for the continuations higher, right? And at this point of time, if prices breaks this area, then you have to look for buys over here or here, right? So this is our trade idea for the euro yen. Understand where prices are trying to lead towards at the end of the day, okay? And we do not make any guesses, right? We let prices tell us where prices wants to go, okay? And at this point of time, you could wait for a break over here. Break of supply telling you that sellers want to sell higher here. And that is why it leaves you a range after it breaks from here towards here, right? Next up, we have the euro dollar. And you can see that we have a sell zone here. So this is a supply zone that broke out of structure, leaving behind this area to be unmitigated. So if I want to be a seller, I want to sell here. So drop down to the lower time frame and understand what prices are doing. Okay, over here, you can see prices left behind relatively equal highs around here, right? And even though over here as well. So this means that prices may eventually come back down towards this demand area to push prices higher into these areas, right? Because this is still a valid supply because it broke out of structure over here, right? And now see what happens here, right? Because prices is distributes over here, it's going to move lower. Otherwise, wait for the break of structure here. Then this now becomes your liquidity high. Okay, for prices to eventually move towards here, grabbing them and move higher into our supply zone on the 4 hours before potentially distributing here, right? Giving the shift, then the breakdown for continuations lower. Okay, so this is the trade idea for euro dollar. Next, we have the pound yen, and currently we have a demand zone over here where prices taps into. But the problem with this demand zone is that it didn't break out of structure. You can see over here, this demand zone didn't break this high. Okay, so let me just use this. It didn't break this high. So can you see the difference? If prices makes an impulse that breaks this level, then comes back down, you could have been the buyer, right? But prices failed to break higher. Okay, which means to say that this move actually mitigated this supply zone inside of here and make a bearish move down. So if you jump down to the lower time frame, you want to see where prices eventually tap into. So now this red zone over here is actually a refined 1 hour demand zone. And this means to say that we can actually remove our daily demand zone and focus on the 1 hour demand zone over here. So what are prices trying to do? We may see accumulation happening inside of here, right? Maybe it's kind of a shift. And this shift does not guarantee that prices wants to head higher, right? And because we see that on the 4 hour time frame, we have a bearish move like this. And this means to say that this accumulation over here may push prices into supply zones here to distribute lower, because we understand that on a daily time frame, since prices failed to make a high here, we may head lower. Compared to if prices breaks this area, then we have our bullish leg over here to continue moving higher because the liquidity point is here, right? And that is why for now, look and see what happens here on the lower time frame. If prices accumulates here, you can take buys, right, into supply areas over here and see whether it distributes. Okay, if it doesn't, and if prices breaks higher here, then it leaves behind a valid demand zone for you to get involved. As prices comes back down, shift, you can take higher, right? Liquidating this level first, take profit, and then aim for higher areas to sell. And perhaps over here on the daily time frame, you have this area as well, right? Where prices can potentially distribute lower. However, if prices taps into this area now and continues to make higher highs, then you are not looking to sell anymore because this is the area where prices are likely to move. This is the protected high. Okay, if prices break this area, it may pull back into demand zones here to move continuously higher. Okay, over here we have the New Zealand dollar, and you can see that currently we are trying to catch sells into this demand zone. Okay, so on the weekly time frame, we have a break of structure here, and now we are looking for a pullback into this area for sells, right? So it's pretty clear cut on the weekly time frame. So if we go down to the lower time frame on the daily, okay, here, break of structure, leaving behind supply zones inside of here, where we are looking for a pullback to distribute lower into this demand zone. So the truth about this demand zone is that you can be a buyer, okay, assuming prices taps into liquidity lows, bounce, breaks down, accumulate here, shift, right? You could be a buyer here, aim for highs, okay, here, aim for liquidity highs, then continue moving higher into this area or this area. So you can see that all of these supply zones now are valid for sells because we have a bearish order flow on this time frame. All right. So unless this flow is broken, we are looking for sells, right? Assuming that this demand zone doesn't hold. Okay. So over here, we do not want to do the guesswork again. If prices wants to go lower, we want to see a breakdown invalidating this area, then look for the last buy to sell moves to get involved. So this is clearer, right? Instead of selling over here and see if prices wants to break lower, you see. And that's why for now, we are looking for a sell opportunity inside of this supply zone, because we definitely have areas to move down, right? This is the range from here to here. So unless prices decides to continue lower on the lower time frame, right, continue to give us the bearish order flow down into this area, then we will participate on the lower time frame. Otherwise, on the daily time frame, we are definitely looking for a move into this supply for sales. Lastly, for the USDCHF, you can see that over here, prices taps into a 8-hour supply zone. Right, after this strong move up that liquidates areas here, trend lines here, give us a shift in structure, breaks down, leaving behind what? Perhaps a daily supply zone, right, where we see a tap into over here. So now this means that we are valid for sells into lower areas here, right? So you can actually aim for maybe on the lower time frame, 8 hours time frame, okay, demand zones here, or actually just look for our ultimate area over here, which is the daily demand zone, right? We still have a range for prices to actually come back down into this area before thinking of whether it wants to accumulate, to move higher, to liquidate all of these levels, right, into higher highs. Because we know that this move ultimately generated from here. Can you see this demand zone now broke out of structure? So technically, as prices comes back down into this area, your liquidity high is at this area, right? So whatever that happens here on the temporary sells is because we are looking at the sell structure here, right? This is a break of structure, pulls back, potentially selling into this area because this demand zone broke out of structures inside of here, right? And if prices accumulates from here, we have a likelihood of prices coming back to liquidate all of these highs, all the trend lines, into our ultimate liquidity high that was supposed to be met as prices breaks this area, leaving behind demand zones to pull back to continue this strong or this bigger bullish order flow. So now this is a current bearish move into this bigger bullish move for prices to go higher.